What's up, guys? So your long calls and your leaps getting smacked the last couple of weeks? Yeah, me too. But in all seriousness, that's a good cold beer. What are we going to do about it? Let's take a look at all of my leaps, my long calls, talk about the state of the market over the last couple of days, maybe walk you off the ledge a little bit, or put things into reality for what might be at stake coming up over the next couple days, weeks, and even months for your leaps and your long calls. Now, really, a long call and a leaps is essentially the same thing, right? Long means we bought it. Call means we want the price to go up. Leaps is just a long-term equity anticipation, security. Don't forget the S at the end. It doesn't make it plural. Pet peeve of mine. But there's really no difference. Leaps just pretty much means that the expiration is going to be more than a year out. And depending on where you're at in that cycle, it might be a lot closer to expiration than a year right now. And that's kind of the first place I want to start with expiration, because that's really going to be the hugest determining factor of, are you really screwed or is it going to be okay? As far as things being okay, things are okay. Right? I need to be clear. I've been pinned as this option trading, YOLOing. Guys, things are okay because my Roth IRA is maxed out. I don't have consumer debt. My retirements are maxed out. This is money. This is hobby money for me. So that's the first thing. This is money I set aside knowing I can lose. I'm pretty frugal. My investment strategy is VTI. This is just something I like to do on the side for a little bit of fun. I'm going to flash around to a couple different screens. This would be the first one, and this is pretty much all of the long calls and all the leaps that I did have open that were once leaps, whatever, but I have them sorted by days till expiration. And that's the first thing I want to talk about. Are we screwed? Fact of the matter is, if you're less than 30 days till expiration on your long call and you're currently in the red, things are not going to get better, easier for you. That's the fact of the matter. Theta right now is accelerating through 30 days till expiration. It is just crushing the value of your option the further you go on. And the closer we get to expiration, really the more we need to think about mitigating losses and getting out of some of these positions if possible. The first one for me is Palantir. Now, I have some of these in red and some of these in white. I have them split between Robinhood and Webull, mostly because Robinhood I've had for a while and Webull I've started using just recently. But we can see Palantir right now has 16 days till expiration. On the spreadsheet, I also keep all of my calls and I put them out in a calendar like this, and I have them kind of color-coded so I can just remind myself. And Palantir is right there in the middle of, oh man, I'm screwed. Here's the chart for Palantir, guys, and this is over in Webull. The position down here at the bottom, right now I have 10 contracts, which had a total cost of $1,095. It's currently worth $80. This is essentially, I chalk this up to a loss. And that's one of the first points I want to make, guys. We're doing this knowing that there is a very, very good chance in reality that we are going to lose money. That is the fact. These are high risk, high reward types of situations, especially when you're doing it with options plays. When you're doing it with shares, one thing, but we have to understand and think about this as terms of a business. If you're going to be trading, swing trading, leaps, day trading, you are a business. To go in and say that you're never going to lose is like a casino opening and saying that they're never going to lose a hand of blackjack. Right? Yeah. Is this gambling? Yeah, I get criticized in the comments. This is gambling. YOLO. I'm out of here. I'm never watching you again. I get it. Right? Baby steps, Brad. We've moved on. But to say that I'm never going to take a losing position would just be unrealistic, right? What we want to do is do what the casinos do. We want to bring as many things into our favor as possible so that over the long run, we'll win more than we lose and at the day be net profitable. Does this sting that I'm going to lose probably $1,000 on this? Yes. But if you're within 30 days and you're in the red, you kind of got to understand that that's the case too. And now, this particular trade was more of a long call. It wasn't a leaps for me. And we can see on my charts, this is where I pretty much would break even at this blue dotted line. And this red is where expiration is. So we can see I need a lot to happen between now and then. And in the current market conditions, It's probably not going to be that likely, okay? And if we draw, you can see kind of where I got in. And this is when I first started, you guys. I was learning. If I draw this right over the dotted line, I pretty much got into this trade right around here without confirmation of a bounce. This is when I was new to trading, guys, and these are mistakes that you're going to make. If I put this other resistance up here, what I did is I looked at the support and resistances, and this is the 4-hour chart. If I go to the day chart, it's not going to be much more different. But it bounced, and then as a new trader, I said, okay, it's here. Now, instead of asking myself, is this going to recover? I said to myself, it has to recover. And that's where it fell off, it flushed out, I dumped, I lost in this position. What I should have done is I should have waited for it to bounce up, a little bit of signs of recovery, maybe watch that EMA, start approaching my 180 MA. That would have been the time to enter this trade, and I would have avoided this. But if you're down in your leaps position and you're less than 30 days, start to think about when you're going to get out. This I'll probably hold for maybe the rest of this week, and then frankly, I'm going to get out of it. Could I wait and maybe something miraculous happens at the last minute? Yes, that could happen. It could also expire worthless. To be honest, it gets to a point where I want it off my plate. This is from 3 weeks ago. I've kind of did what I had to do. I've moved on, and things are going to be okay. Then you have these range of your calls that are maybe like 40 to 70 days, 40 to 60 days. That's kind of where I like to be when I'm going to swing trade. I like to go out about a quarter, probably like a little bit after earnings to avoid IV crush. And that reminds me that earnings are approaching and I got to get out. To be honest, if you're down on those and you still have 40, 50 days, I don't think we're at a time where we need to worry or panic just yet. Like with my Microsoft and my TQQ, I got to be honest. Right now, I watch them on a daily basis. If we look at Microsoft, today it was up $170. I'm still down 620 on the position. I'm really not worried about it. I don't really start to think about this until I get to about that 30-day mark. Now, there are some massive exceptions, guys. I don't even want to know what this is going to be tomorrow. To be honest, I don't even want to know. This isn't really a great chart, but I'm recording this on the day. Oh gosh, I can't even like get it out and say it that they released earnings. If I come down to the 5-minute chart and we kind of look at after hours, this thing, guys, is dumped 22%. Right now, trading for 249. I have 350 leaps. This is one of those that happens to be a pretty far out from expiration, 71 days. This is a leaps. If you are in a position like this, other people that have gotten smacked, who's gotten smacked? Netflix has gotten smacked. PayPal's gotten smacked. Leave in the comments, what did you do? What do you know? It's over. Like this Facebook, it's over as far as I'm concerned. I'm saying it today on Groundhog's Day, February 2nd. My Facebook call, it's over. Do I have hopes that maybe I can recuperate some of that and we can maybe get back up to where we were in the 300s? That would be dope. I'll surely take that. Cheers to that. But like I said, guys, this is a calculated gamble. These are things that we know, and I chuckle, but it's like at the end of the day, you have to think of it as, man, I got burned on this one. You know, I'll be back. I'll see you again, Meta. I'll see you again, Facebook. Because we talked about this in a video a long time ago when I shared the difference between having a leaps option and having 100 shares. I still believe in the leaps. Because yeah, even if this goes and becomes worthless, I take a $2,500 haircut. Like that sucks. But do I think that Facebook is over as a company? No, not at all. Not in the slightest bit. Do I think that one day it's going to recover back into the 300s? Yes. And do I understand the market conditions and why some of these things are happening? Yes. Am I going to abort Facebook and never invest in it ever again? No. What I'm going to do is I'm going to wait for a little bit of a slowdown. I'm going to wait for a confirmation of a recovery, and then I'm going to purchase leaps again. And you want to know what? I'm going to lose $2,500 here. I might only gain $2,000, but at the end of the day, long term, big picture, leaps, long term, I'm not that worried about it. I think that over the long term, I can mitigate some of these big losses that look bad on paper now and be like, all right, we'll get through this. We can handle this. This is something that we can really, really do. So those short ones, I'm taking an L. Those medium range ones, I'm kind of hopeful. Like, I have this SoFi, which was a runner. So I'm actually very profitable. I can't lose money in this SoFi position. I had 10 contracts, and then when they announced their charter, I did quite well. I left this one just to see what would happen. But like March 31st, SPY, if we look at the SPY at 470, like, yeah, is it high hopes? Yeah, it's up here. This is where I have it. If I look at the daily chart, here's where I wrote that. So I have my expiration. Do I think that I can get into this neighborhood of 470? I really do. By March 31st, I really do. So I think this position is okay. Even though I'm down $2,200, and even though that's 59%, I'm not that worried. The same with this Apple position. Like this Apple position, I'm not that worried about it. So let's see. It's climbing back up. I'm about to break even. Where are we at, Apple? Right now, that's in the money. So this is beautiful. If Webull would allow me to write a call on this, I would, and do a little dance around with a little poor man's covered call. Yo, Webull, can we get some diagonal calendar debit spreads, please? That would be dope. Thank you so much. So like this position, not that worried about it. Even though, and like I said, if the dollar amount scares you, like $2,200, you have to think about portfolio ratio. I'm going to admit, this is 24% of the portfolio. That's a lot for me. This right here is the remnants of me being excited about swing trading and leaps and being all in for 2022. And I got excited. I got burnt. You guys have seen the videos. I got burnt a little bit, but I'm mitigating. I'm also winning now. These are stuff that I've been holding. I'm winning. So that's the other thing you could do with leaps. You can start selling calls against them. If you have level 3 options in Webull, level 3 options in Robinhood, you can't really do that in Webull. So those are ways I'm mitigating loss. If we go back to this, you can see these are calls that I'm writing against it in the poor man's covered call. The reason that this Voozy disaster, guys, look at this Voozy disaster. This is a long call. I still have a 2023. I've already had this for over a year. When I got it, it was $400 all time. It got up to a point where I got from 400 all the way up to 2,400, and now I'm back down to here. But over that long term, I have sold $1,500 worth of poor man's covered calls, short calls against this. So I paid $400. Right now, it's currently getting smacked down to $260, which puts me at roughly a $250 loss. But over that time, I've earned $1,500 doing the poor man's covered call. Awesome. Same thing with Starbucks. Starbucks taking a little bit of a hit. I got 135 days until the Starbucks call expires. Taking a big hit. Guys, that's what happens around earnings time. Right? This Starbucks right here, not doing bueno, down 50% on it. But expires in June. We got time. Okay? Don't freak out. This is a long-winded way of saying, like, don't freak out, but know that some of them you're going to take a loss on. But just like we don't sell stocks when the market's down, right? We buy low and sell high. If you are owning Facebook right now, you're like, oh man, but what are you going to do? You're like, I'm going to hold these shares and it's going to go back up. What we have to do is we're forced by expiration. So we're going to have to wait till expiration. And then when things start to recover and come back, right now they're just correcting down to really what they should be priced at because we know the market was overpriced. We'll get back in and we'll ride Facebook up just like we owned 100 shares of that particular stock. At the end of the day, guys, make a plan. Sort them by expiration. Closest to expiration is probably going to be the ones that you need to focus on right now. All right. And to protect yourself against things like this, because this is not over. This is not over yet. To protect yourself, consider buying these calls in the money, deep in the money, 0.7 delta or greater. That's going to help protect you. Some of these are not nearly as ugly as they should be because I went in the money, and the ones that are gruesome, I went close to the money or even out of the money. And these are lessons that I'm learning. I wrote that Facebook call at 350. It was never there. Should have never happened. This is why right now I shifted the momentum over to the house and they're taking the money. But I'm learning market tuition, and you'll learn too. We'll get through this together. I'm going to update you on this stuff. I'm not going to update you on Palantir. We're going to take the L. We're going to take the $1,000 L on that. It's going to happen, you know. But this week, day trading and swing trading and doing things like that, I've also made $1,000 or so. So take some money, lose some money, just try and gain some more money. And at the end of the day, everything will be just fine. Long-term equity, anticipation, security. Don't forget the S. Have a great day, guys. I'll see you on the next one. Oh, they always forget that.